For more on this, let's welcome in Senior Research Fellow at the American Institute for Economic Research, Paul Mueller. Paul, the agreed-upon 15% tariff on imported Japanese goods is a meaningful drop from the 25% rate Trump threatened previously. And there's more great news. The president posting on Truth Social, Japan will invest, at my direction, $550 billion into the United States, which will receive 90% of the profits. So break this down for us, how this deal boosts our economy.
Well, President Trump has his objectives. He wants to open foreign markets for U.S. goods, and in that regard, the Japanese deal is a win. He wants to tout more investment in the U.S., and so his announcement there is also a win. We should ask the question, how much were the Japanese going to invest before this deal? If they were going to invest $525 billion and now they're doing $550, that's not necessarily a huge change, but still it's significant in terms of dollar amounts. And then we can also ask, what is the upshot of maintaining this 15% tariff on Japanese autos coming into the U.S.? It's lower than the 25% threatened tariff, but it's much higher than the tariff was a year ago. And so consumers are going to see their Hondas and their Toyotas become more expensive.
Yeah, I appreciate that perspective, Paul. President Trump touted the deal with Japan once it was completed. Listen to this clip.
But I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. And that was done with Japan. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
Paul, this might be taking a little longer than people had hoped, but it is apparently working, Trump's tactics. And I wonder if this could be a model for negotiations with other trade partners moving forward.
I think that it really does. It is a credit to President Trump's negotiating skills here in terms of he's getting what he wants. He wants higher tariffs on foreign goods coming into the U.S., so tariffs are going up on Japanese goods by and large. And he also wants to have lower tariffs or fewer barriers. Many of these barriers are not directly tariff related, but barriers to U.S. goods going into Japan. And he's been able to remove or lower many of those. So he is following his agenda here of raising tariffs on goods coming into the U.S., trying to make it easier for U.S. companies to export. This is kind of what happened with the U.K. deal about a month ago. And so Trump is getting what he wants here, and so I'm not surprised he's pleased with it. And I think there's some good things to it. Again, as I mentioned earlier, I'm not sure it's all upside for the American consumer. It depends on what part of the economy you're in.
Okay. Well, yesterday, the president revealed a trip to China is not too distant. Do you see that as a sign trade tensions are easing between the world's two largest economies and our overall relationship with China might be on the mend?
I think so. That would be a huge step to do a visit to China. And China is really the elephant in the room. Of course, Japan is a major economy, and our trade with them is over $100 billion a year. So that's a big deal. But China is by far the largest sort of trading partner, and especially when it comes to electronics. So President Trump sort of excluded electronic imports from China from his temporary tariffs or his 10% universal tariff. So that needs to get meted out. But going to travel there, I think the Chinese know he's serious. I think they understand what he's trying to do in terms of boosting the U.S. economy. I'm not sure what their requests are going to be on their end, but I know that what Trump is going to want to do is he's going to want to have higher tariffs on Chinese goods than we've had in the past, and he's going to want to see the Chinese come to the table when it comes to allowing U.S. goods and U.S. companies to compete in China. And the Chinese have been some of the worst on this front. They have been very exclusionary. They've had lots of restrictions on U.S. companies doing business in China. They've had lots of restrictions on U.S. goods being exported to China. So there's a lot of room for improvement here. And the fact that they're talking about a potential visit suggests that they've come a long way in hammering out these trade details.
And it looks like Europe might be next. According to EU diplomats, they're working with the U.S. on a 15% tariff deal. You think that's a fair middle ground?
Well, again, I'm not a huge fan of putting lots of tariffs on goods coming into the U.S. It does generate some revenue, and the president has talked about that. And of course, we need revenue for the federal budget. But it's not clear that this is the best form of tax to get a revenue. It's going to raise prices on certain goods for U.S. consumers. So on the whole, I have some skepticism around how high we want tariffs on goods coming into the U.S. to be. And I kind of disagree with the president on that front. But on the export side, he is making lots of progress. The UK, Japan, Indonesia just last week. And I think he'll probably make a lot of progress and get a lot of concessions from the EU, again, to just open their markets to U.S. goods in ways that they have been very closed off. So on that front, it's going to be positive for the economy. It's going to be positive for a lot of industries that are more export focused. And my guess is that Trump is going to be able to make some of this happen at the end of the day.
Paul Mueller, thanks so much for joining the show.